Hi, I'm here today with Samantha Zumwalt at PRMG. She's my preferred lender, and she's going to discuss with you that if you are a seller and you are thinking of making a move or downsizing, but you don't want to let go of that 2% interest rate, how cashing out on some of that equity that you've built over the years, doing some debt consolidation, might actually save you some money in the long run.
Yes, Stacey. So as we've basically discussed before, there's a lot of sellers out there that are struggling with wanting to sell their home and get rid of that low rate that they locked in 20 and 21. Right now, you're looking at interest rates at around 6.5%, depending on the loan type and how much money you put down. But the best thing to look at is your overall financial picture. When you're looking at selling, and just don't get fixed on just keeping that low interest rate on your first mortgage, you probably have revolving debt and installment debt. Those rates on those kind of credit lines are between 15 to 25% right now. So what we look at is blending your total actual debt rate so that you know if you were to take say you had a 3% mortgage payment, you put in those 10, 15, depending on how many credit cards you have, your blended rate actually averages out to about 6.75, depending on what your debt is. Now, if you were wanting to look at saving in the monthly outgoing picture of what you pay on your bills, taking a portion of that equity on your home that you would have from having a home for the last couple years here in California, especially, you definitely have equity. We can take a portion of those proceeds and pay off that revolving debt, which will save you in the long run because you cannot write that off or get that interest or tax deduction on that revolving or installment debt. But if you were to have a higher mortgage and a higher interest rate on that mortgage, your savings alone, tax-wise, right there is a huge benefit. Not only that, getting rid of those monthly installment payments because they're on a shorter term is probably going to save you at least $500 a month depending on your financial picture. So it's always just best to reach out to a professional so that we could sit down and go over all of these numbers because every scenario is very specific, and then come up with a plan to devise you to get off the fence and go into wanting to buy that home of your dreams that may be available at this time that you're really wanting to do and actually save you money in the long run.
So if you're interested in chatting with either of us about your options, please give us a call.